This is the company accounts for the 2012 Question West Limited. I'm going to quickly go through most of these notes because they're quite similar to the 2015 one. First one we have here, damaged stock, dropped in value. So we take the difference, basically the drop in value itself, which turned out to be 3,100. And then difference between the 5,400 and 2,300, we take that away from closing stock. So we're taking the what happened, what did we lose out on for stock, and we take it away from closing stock. Second one we have here, again, investment income is included in patents. So investment income in total is 300,000 at 4%, somewhere up here. So we're getting out the full year is 12,000. We're looking at 3 months incorporated, so 3 months is 3,000. Again, this is a credit. Investment income is credit side figure. So if it's credit side figure is included in patents, which is usually debit side, to cancel it, we would have had to add here. Now you may notice that I've included, in terms of getting a balance here, there's technically the balance here, the 3,000 will cancel out, but this 3,000 actually doesn't exist. This is something that was priorly done. So this wouldn't actually exist at all. I'm just showing you that this would be shown up here in arriving at this figure. So to cancel it, you put it on the debit side. Basically, investment income is included, and it's a credit side figure. It's included in patents, which is debit. So again, you're just adding it to get rid of it, which is unusual. Usually take away something to get rid of it, but in this case, the credit figure is included in the debit figure. So add to get rid of it. It is to be amortized over 4 years. So I'm just dividing the total by 4. I get 5,850. That's my admin figure for the year, and the difference between the original patents and what's written off is what's left, and that's the intangible fixed asset. Note number 3 is my suspense incorrect figure for debenture interest. So my debenture interest, the incorrect figure that's shown here is for 4 months. So I need to find what the real figure for 4 months should be. 9% of 180,000, get 4 months of it, it's 5,400. So that should be the figure. What was shown, 5,600. So how do we take it from 5,600 to 5,400? We have 200 on the credit side to bring that down. The suspense account is salaries, general expenses, so that's the figure we're given, 194,000. I'm going to bring the 200 over. Now the second part here is the discount allowed entered only into the discount account. So again, discount allowed, if you allow a discount, that means somebody's paying you and you're saying to them, look, I'll let you off 450 euro. So you're allowing a discount. So who pays you? Debtors or creditors? Well, debtors pay us. So we allow a discount to our debtors, and seeing as we have to pay creditors, we can receive a discount from them. Because if you go into a shop and you go to buy something and it's on sale, you're receiving a discount. You're paying less money than you should, so you're receiving a discount. So that's for creditors, and for debtors, because they pay you, you allow a discount. So that's the debtors account. The original balance is 98,400, and with 450 on the credit side. So this is our new balance for now. Debtor shows up again in the bank note. The fourth note we have here is the stock destroyed by fire. So the original stock value is 5,000. It was destroyed during the year. The closing stock is when somebody goes into the warehouse and counts up the amount of stock at the 31st of the 12th. So if something was already destroyed, it means it was already gone during the year, so it doesn't come out of closing stock, it comes out of purchases. Purchases dropped to 1,135,000. The stock itself was worth 5,000. We received 4,500 compensation. Compensation is a current asset. And the 1,000 difference is an admin expense. It's admin because we've lost out by insurance, not by the stock itself. So the original cost minus the compensation we're going to get is a loss. Sometimes we'll get fully compensated and there'll be no loss, but this has to be a current asset figure, and the difference here is an admin expense. That usually catches people. Fifth note, we've seen this quite a bit with Sole Trader again. It's a disposal. There was 69 months depreciation, so it works out 11,900 net book value. We received 6,000 for it, so 5,900 is your selling and distribution expense. The original cost of vans was 260,000. I'm taking away the disposal cost, and I'm adding on the cost of the new van. That's my new balance sheet cost. My depreciation for the year, well, what was my vans worth at the first of the first, and for how long did they stay at that value? They stayed at that value for the first 3 months. So first 3 months they were 260,000 by 10%, and then after that their value was 286,000. So just getting the remaining 9 months, and that's my total depreciation figure. I'm going through these quite fast because I'm assuming that you're somewhat comfortable with these questions, these notes, because we've kind of seen them a good bit before. The accumulated depreciation at the first of the first is 80,000 because the cost was vans was 260 and the net book value shown here is 180. So this is the 80,000 accumulated depreciation at the first of the first. That's my depreciation for the year. I take away the depreciation from the disposal up here, and I arrive at my accumulated balance sheet depreciation. Last part of it again is they always tell us that it was included. Check for the net amount of the transaction was incorrectly treated as purchase of trading stock. So the purchase of a new van was treated as purchases of stock when it's not. We purchased a fixed asset, and we did not purchase stock to sell. So the new van cost us 54,000, but there was a 6,000 allowance. Basically, they let us off 6,000. So we actually paid a check for 48,000. We included that in purchases when we shouldn't have. So I'm going to take that out of purchases to reduce it, and that's my new trading profit and loss figure. The next note I'm going to move on to is the banknote. So for this one here, there is again, like the last time, there's 3 different sections. First 2 are to do with changing the company's bank account. Third one is to do with changing the bank statement figure. I would always read through this anyway. Don't get comfortable with once you've done a question multiple times and okay, the 3 or 4 lines at the top is always the same. I'd read over it because it can change something here sometime and then you get caught out. The first one we have here, so a check for 640 was issued to a supplier, had been entered into the books as 460. So we sent a check to a supplier. A supplier is a creditor. If I send a check to a creditor, it means that I'm reducing the amount that I owe them because I owe money to creditors. If you send them money, then obviously you owe them less money. My creditor balance is 82,200. Now, when we deal with the suspense question, which topic you'll do next year, the topic is entirely based around scenarios like this, where there was a mistake or something wasn't put in or something like that. So when we're looking at those questions, sometimes it can be confusing to find out what was the mistake, how do I fix it, and what should have happened. So in order to make this process a little bit easier, we can use a figure in red. We can put in a figure in red. If you notice something from the balance, 82,200 plus 460 is 82,460. If I was to take away the 2 of these, which add up to 1,100, I'd end up with whatever it is, 81,360. 81,360. No, it doesn't balance. The reason the 2 of them don't balance is because the red figure actually doesn't count towards this balance. So what I was saying there is that the balances on both sides minus the balances here usually give us the final figure. But if you notice, if you were to count these up and take away the 2 of these, they wouldn't balance. And the reason they wouldn't balance is because this red figure here doesn't actually exist. It's not part of my T account. I'm showing it here. It was previously part of the T account in order to arrive at this figure, but it shouldn't be here. But the reason I include it is because it gives me a chance to see what was the figure that was a mistake and what side was it on. because we sent a check to a supplier. It means that we reduce the amount we owe the supplier. So to reduce your creditors, you put it on the debit side, and therefore we would have reduced the value. I'm showing it in red because it's something that previously happened, but I will not include it in my totals. It makes it easier for me to see, because how do I cancel this? This was a mistake. How do I cancel it? Well, this was a mistake. It's already happened. I already happened that I don't have to put it into the accounts again, but I do have to cancel it. So this is me cancelling it on the opposite side in black because it goes in. I put in 460 on the credit side. So basically I'm adding that 460 back to creditors. I'm saying that, okay, they had previously reduced their balance by 460, but they shouldn't have, so I'm going to add it back. So this is what the balance should be. And then I put in the actual transaction. So the check was issued to a supplier. So now I'm going to say, okay, this is what the balance should be. I send a check to a supplier, which means I paid a supplier, I paid a creditor. I don't no longer owe that money. The check was 640. And now I arrive at my final creditor's balance. You could say, why are you taking or adding this on here to the credit balance and then taking this? Why don't you just take the €180 difference? Generally, it's much easier to deal with this question if you break it down bit by bit, and you'll see the suspense topic itself can be quite complicated. Sometimes there's multiple steps, so this is just us getting into the habit of dealing with this kind of bit by bit. So the first part is show the mistake that was made, but show it in red. So I've shown the mistake and I've shown it in red. Then cancel it. Obviously to cancel it you put it on the opposite side. So you need to do this. This is something that hasn't been done already, so it goes in black. The rest of the figures go in black. This is the only thing that goes in red. So you cancel the mistake, and then you put in what should have gone in the first place. And that way it streamlines the process, rather than you sitting there and going, okay, well they took this away and this is the difference, so what do I do with the 180? It's a common fault that people mess up on. So break it down step by step. Show the mistake, show it in red. This isn't something you're inputting at all, it's just something that happened. Cancel it, opposite side, and then put in the real adjustment. Moving on to the bank. The bank itself here was 33,000 overdraft. So I'm showing 33,000 overdraft. I'm cancelling the incorrect payment. So what happened with this is, obviously I have an overdraft of 33,000. I put down in my accounts that I paid 460 to a creditor, but the 460 is a mistake. So I want to cancel this. How do I cancel a payment I made to a creditor from the bank's perspective? I just add the 460 back, because obviously if I'm cancelling a check that was made the incorrect amount, then obviously I have a little bit more money in my account because I've just cancelled the payment. So the 460 goes in here. I'm adding it to the negative balance to decrease it, and then I'm inputting the correct check. So the correct check is €640 that I'm paying to somebody, so it's going to put me in more debt again, minus 640. You could do that in a take-home way if you wanted. The 33,000 is on the credit side. I'm adding in the incorrect check as this money is coming back in, so this would be a debit side figure, the 460. And the credit side again is me further increasing my overdraft because I'm paying the check, so this would be the credit side. The next part of this here is a credit transfer of 900 had been paid directly to the firm's bank account on behalf of debtor was recently been declared bankrupt. This represents the first and final payment of 30 cents in the euro. This is the same as the liquidator scenario we had in the 2015 MELP question. So the company is basically on their knees. They're struggling to pay off their creditors, and they're saying to us, look, we're going to give you 900 quid. It's only paying 30% of our debt, but look, that's all we can do. We're going broke. You won't be hearing from us again. Apologies, but we can't pay off the last 70%. That's the overall scenario that's happening here. So what happened is they have paid us €900. This €900 is 30% of the debt. So my debtors balance, which you have to be careful here, the debtors balance from the question is 98,400. But remember, we've adjusted debtors already in the discount allowed note number 3. We adjusted debtors to 97,950. If you want, you could go back up to this debtors account and you can change it there. I'm just bringing the figure down. It's from note 3. It's a common mistake that people make is they ignore the adjustments they've already made and they take the incorrect figure. This is my new debtors figure because I've changed it already. So this is how much the debtors owe me. They've actually paid me 900. So I'm going to take the 900 out because this guy or girl doesn't owe the money, the 900 anymore. So I'm going to take the 900 off of the debt that they owe me. This represents 30%. The 70% isn't going to be paid because the 900 was a first and final payment. Therefore, the 70% going forward, they're not going to pay it. So I'm going to cancel that as well, and I'm going to put that through as a bad debt. This should be here. I'm going to put that through as a bad debt. So the 2,100 is a bad debt. It's a selling and distribution expense. And I'm also taking out of debtors because I'm not going to receive this money. They're not going to pay me. So if I take the two of these out, my remaining debtors balance is 94,950. 94,950 is my new debtors balance. I'm taking away the full debt because they've paid 30% of it and the remaining 70% of it's bad debt. Gone. Bank is what I have to change here again. So what happened is I received €900. If you receive €900, it's positive. So I'm going to add that there to an already negative balance, and I'm arriving at my final balance of an overdraft of minus 32,280. So minus 32,280. I need to balance this here. The overdraft they're giving us is 31,280, and I'm told that a check for fees for €1,000 to be paid to a director hasn't been presented yet. So if I'm paying a check to a director, it means I'm spending money, putting the company into a further overdraft. So the bank statement balance, and again, the only reason I'm changing the bank statement balance here is because this third one is a check which hasn't been presented. Whenever they said something hasn't been presented for payment, it means the bank doesn't know about it. So the bank statements balance is off, not our own bank account. So we were in debt of 31,280. We're sending another check of 1,000, so we're going to be in further debt. Our new bank statement figure is 32,280. So this doesn't go into the accounts anywhere, but I can see that this matches this. There's a mark going for this from your notes, so please do not ignore it. There's a mark going for it, it's just it doesn't go into the final accounts. Note number 7. This wasn't in the last question, but it's not too difficult. The advertising payment is for an 18-month campaign which began on the 1st of October 2011. We're dealing with the accounts for 2011. We're dealing with an advertising payment that happened, and the months that are included for this year are going to be the months that come after October. So we have the entire of October, November, and December. So this advertising campaign is for 18 months. It began after 9 months of this year, so the remaining 3 months of this year will be included as part of an expense for this advertising payment. And the next 15 months represent the next year and the third. So that's money that we paid off in advance. It's an expense prepaid, i.e. current asset. So my advertising figure that they've given us in the question is 4,800. This is for an 18-month campaign. So 18 months, 3 months applied to this year because it's October, November, December. So 3 months works out at €800. That is an expense. It's selling and distribution. Advertising is to do with selling and distribution. Just one of those things that you should learn off for the selling and distribution. Learn off the list and you'll know what goes in. Advertising goes in because it's seen as a direct influence on our sales. And the remaining 15 months amount to 4,000. We've prepaid an expense because we've prepaid this inevitable 15-month advertising expense. So this is a current asset. We paid it off in advance. We don't need to pay any more money. So we're owed the service. So we don't owe anything. So it's a current asset. The note itself is generally quite easy if it comes up. Sometimes it comes up as wages as well. It's not too difficult. Last part of this, we need to be fixing our investment income, find out what's due, and our debenture interest, find out what's due. I'm not going to go into this in too much detail. Investment income, we found out in note number 2 that the total for 12 months was 12,000. We found out that 3 months was already paid off, included in patents. So I'm going to take away the amount that has already been, not paid off, sorry, already received. So I already received 3,000 out of the total 12,000, therefore there's 9,000 that I haven't received yet. That 9,000 is a current asset. Debenture interest, the total interest for the year is 16,200. I've already paid 5,400. This is the correct figure from the suspense note. Remember they showed 5,600 up here, and then we cancel the 200 to bring us to this balance. All of these are kind of pushed up. So the 5,400 is already paid, so I'm taking away that from the debenture interest to find out how much debenture interest for the year have I not paid, and it's 10,800. That's dealing with the first two. There's two more parts to deal with. Provision for bad debts to adjust to 4% of debtors. Well, my debtors figure from my note number 6 is 94,950. So 94,950 is my debtors figure. The bad debts is at 4%, so that amounts to 3,798. Again, this is offset. My provision for bad debtors offset from debtors in the balance sheet. But always look through the question to find out if you have a previous provision for bad debt balance. Provision for bad debt here, credit side, it's always credit side, and the amount is 3,000. So we had a previous balance of 3,000. Now our balance has got up to 3,798, which means we've increased the provision for bad debt. We've increased the amount that we expect to have to lose out on. So it's seen as a loss, so it's a selling and distribution expense. My old balance is 3,000. My new balance is higher. I've increased the provision for bad debt. Obviously, provision for bad debt being a bad thing, it's an expected loss from debtors who aren't going to pay us. So it's a loss. So the 798 is selling and distribution expense. Last part of this, nice and easy. My buildings are to be depreciated at 2%. My buildings in the question are 800,000, 2%, 16,000. That's an admin expense. There is no depreciation prior to this year, so this will actually also be a balance sheet depreciation figure as well. Trading profit and loss. Again, please don't ignore titles. Some people do it when they're doing tests. They rush so much they don't put in a title. There's a mark going for the title. Sales figure taken straight from the question. Opening stock straight from the question. We've changed purchases and we've changed closing stock. That's why they're worth so many marks. My admin, we again paid in salaries. Directors' fees. This was given in the question. It's an expense, so it's on the debit side. So when you're looking through these, you should look for debit side figures. Directors' fees is here, 40,200, and that is to do with an admin expense. You're just paying off people in the company, nothing to do with selling. So everything here that's included on the debit side that's an expense, it has either been adjusted or else it goes straight in. The depreciation for buildings goes in here as well, obviously. Bad debts, depreciation on vans, increase in provision for bad debt, loss on disposal of a van because vans have to do with selling and distribution, loss on insured stock. Now, I wanted to highlight this because this is a mistake in the marketing scheme. This 1,000 here is a loss on insurance, so it's an admin expense. I think before they didn't care where it was included. obviously I don't really know, this was done in 2012. But the loss on insured stock here, I just know that I remember seeing somewhere before that they had said that they kind of changed a couple. They do occasionally change a couple of things around. This loss on insured stock here is included in the selling and distribution, but I can promise you that if it comes up in your 2021 Leaving Cert exam, it'll be shown here in the marking scheme. It's a loss by insurance, so this 1000 should be up here. Advertising, again, obviously is to do with selling and distribution. We're coming at our operating income. The income that has to do with the operations of the business, two of them here, one of them here, and it's from the notes directly, 10,400 be on the credit side. Discount. After that, I have my non-operating income, which could be profit on sale of a fixed asset or investment income. There's no profit on sale of fixed asset, it's only investment income. Investment income we worked out the full year is 12,000, so that's my income figure there. I take away the debenture interest figure and arrive at my net profit. Finish this off, I just take away my dividends paid. Company account will always nearly include dividends paid. I can see that here, 23,300. There's no adjustments to it, sometimes there is. So I'm taking away the 23,300. Writing my retained profit, my profit and loss balance from last year. You can see up, where it's going to be up here. It's on the debit side, so it's a loss. So I'm taking it away, and I arrive at a final P&L balance of 26,852. You have to get all of this right. You'd have to get this exact figure to get the 3 marks here. There's no apportioning marks, so it's either all or nothing. Balance sheet. Just to go through this here again, I'm taking my patents figure that once I take my patents minus my written off figure, that's the guy here. Again, I do this in 3 columns. You can do as you please. It just figure out that 3 columns gives you more room. And there's nothing wrong with using 3 columns. Again, this total would be included with the 2 of these to arrive at this total, but it's not. That's nothing too major. There are my fixed asset figures. Working out my investment figure goes in here as well. Now I have my stock. This is my compensation that I have to be paid by insurance. It's a current asset. Debtors minus provision for bad debts. They always go in that format here in the first column. Put everything else in the second column, because that way you can subtotal these. This is the correct format to show the debtors in, always when there's provision for bad debt. Advertising prepaid was an expense prepaid, so that is current asset. And investment income due. This is money that I have yet to receive from my investment income. Creditors, bank overdraft, debenture interest that I haven't paid yet. All short-term liabilities, and 1.356 million is my total net assets figure. Finance by, I have my long-term creditors of 180,000. Again, authorized and issued, showing both because there's marks going for this as well. Authorized is given at the top of the question, and we don't include it anywhere else in the accounts. Authorized capital 1.1 million in ordinary shares and 500,000 in preference shares. So I just input the 2 of those figures here. My issued is given below in the question, 700,000, 400,000, because of my issued ordinary and my issued preference. So I input the 2 of those as well. This is what I wanted to bring your attention to, the transfer to capital reserve, the same as your evaluation reserve. Reserves are shown in the finance by. So in this question here we have 50,000, and it's shown on the credit side because it's a long-term liability. So this is money that I'm paying towards a reserve. So this 50,000 here goes in as finance by. Just whenever you see the capital reserve, you're inputting here into the finance by section. My profit and loss balance is from my previous P&L up here. It's positive, it's 26,852. So I'm adding that on as well, and I balance my figure then again at 1.356 million.